And a very warm welcome to this Master Investor Monthly mashup with myself, Sarah Lowther, and Jonathan Davis, who is the author, investor, podcaster, and editor of the Investment Trusts Handbook. So, Jonathan, long time no see, but I reckon it's because you've been so heavily involved in the city's best kept secret, aka your book, The Investment Trust Handbook. So last time we spoke, the deadlines were approaching and it was just taking longer than normal.
It was, unfortunately, it was taking a bit longer than normal. And that, I'm happy to say, is really a function of success because there are just now more contributors and partners to have to deal with. So I'm kind of juggling a whole army of people who help me with this annual publication. And they're all very helpful, but dealing with them all does take more effort and more time. It's a bit of time and management problem, in fact, classic time and management problem. But anyway, so it's all done. It's gone to the printers, and with any luck, it will be coming back from the printers in the second week of December. So not too far, not too long to wait.
Excellent. And in time for my birthday. So please put a signed copy aside for me, please, Jonathan.
Okay, well, of course. I mean, Sarah, why else wouldn't I would never forget you about that in that matter. Of course not.
So, in terms of the anecdotes and the advice and everything that you've been curating for the book, are you allowed to give us a tease, a bit of a spoiler, and impart some of the advice that's been given or an anecdote that we could benefit from?
Of course. I mean, essentially, the thing is could be summed up in a simple phrase, really, which is it's been a poor time to be an investment trust investor, but it's a very good time to become an investment trust investor because of what's happened over the last 2 years. There's been this massive derating. In other words, discounts have widened, and that's created all sorts of opportunities. That was true a year ago. There were discounts then, were wider, but you have to have patience and the ability to spot the turning point. And I think pretty much, as we said in one of our earlier podcasts, it looks pretty likely that that turning point did happen, a couple of months ago. And that is the kind of theme of the handbook this year. Always have to look forward as well as back. Looking back, there's a lot of red ink out there. Looking forward, there is at least the hope of some better times ahead as more opportunities emerge. And I think people are beginning to take advantage of them. So, but it's got to be realistic. You buy investor trusts mainly for their long-term performance. They're not really a trading instrument, but you can make money by trading them. But what you can do is you can add a certain percentage to your returns if you can buy and sell them at the right time. But if you don't do either of those, you're still going to do okay if you pick the right ones over time.
So, as we approach year end, any standout investments from your world that you admired and that can continue the trend into next year? Because in a previous podcast, we mentioned Greencoat UK Wind as being one such opportunity. And at the time, you said to me, it has an inflation-linked yield commitment, which it's going to keep.
Indeed, it is, and it has done, and it will continue to do so. Yes, and things are looking quite good for those for UK Wind and other renewable energy, renewable infrastructure trusts. I think they have gone out to big discounts, but they've started to come in. And over the last month, for example, I've got a little list in front of me. I thought you might ask me this question. UK Greencoat UK Wind is up around 6 or 7% over the last month. But there have been some bigger gains as well. So, some of the battery storage trusts, for example, they're up more than 30% in one case, 25% in another, just over the last month. And pretty much sort of down the whole list, you'll find these are trusts that have benefited over the last 4 to 6 weeks. And that's partly because the discounts were just so wide. And also a lot of gloom out there. There's always a good sign when there's gloom out there. If you remember people saying there was a big wind auction, an auction for new offshore wind contracts, and nobody applied back in September. And I remember we talked about that, and I said, well, that's actually a positive sign because it means that the sort of guaranteed price the government's offering is too low, and they will then have to come back with something better. And sure enough, they did come back since then with a price that's roughly twice as high as the one they were previously offered. So that's going to be good in encouraging more development. And there was some help for wind also in the autumn statement. So that was done well. But quite a lot of other things have done well as well. A lot of private equity trusts have done quite well. Smaller companies trusts have done well, and some of those will continue into the new year and beyond, for sure.
So you mentioned the autumn statement there. It's been delivered. A big tick list to me, it was more like a pre-election manifesto. So I was trying to extrapolate what it really means for investors.
Well, okay, so what does it mean for investors? Well, um, investing is, there's two things about investing. Obviously, there's how much money have you got and where are you going to put it. You've got a little bit more money, and if you're a certain kind of person from this budget, because of the cut in national insurance for employees, that kind of thing. There was a lot of mention of tax cuts overall, as has been pointed out by a number of observers, independent observers. It's not as generous a budget as it appears to be, or at least was presented as, because in particular, inflation has continued to increase, has increased the amount of tax, the number of people who have to pay tax because of so-called stealth taxation. In other words, the thresholds for not paying tax have not been raised by equivalent inflation. So basically, you're still worse off as a result of that. So it does affect, on the one hand, how much money you've got to invest, but also, I mean, they have done a few things which might be helpful to investors. Mostly mechanical, structural things. So they have, they're proposing to slightly change the rules on ISAs, for example, so that you can invest in more than one type of ISA in any one year. It's quite irritating if you want to put half your 20,000 into an equity trust, another one into a cash ISA. You can't do both in the same year, that kind of thing. So that may help at the margin. And then there's some interesting proposals to try and loosen up the pension regime. So, the idea of having a pension pot for life. So instead of having to, accumulate, as people move jobs so much these days, they accumulate little pension pots here, there, and everywhere. This is a proposal that will allow you to have a single pot that you sort of carry around with you, which will be helpful again at the margin. But all these are sort of long-term things. So I guess the issue really is, I mean, you said it might be seen as a pre-election manifesto. Well, of course it is, because there's an election next year and the government is trying to put itself forward in the best light. But I don't think that changes the fundamental picture, which is that the public finances are very, very tight, and debt interest is becoming a bigger problem. So whichever government takes over next time, the promises that people make, most of which are about what's going to happen in the future, don't count for much, frankly. So I don't think there's nothing in particular that's going to help in the short term. Longer term, I might also mention this idea of making the full write-off of capital investment against your tax bill for companies will be positive if that stays in place. It becomes permanent. That's probably going to be a benefit to the economy as a whole, and that in turn might have some impact for UK companies. But overall, I wouldn't get too excited. I don't think it's going to change your life overnight.
So you mentioned elections there. How exciting were the results in the elections that we've seen in the Netherlands and Argentina?
Well, they were certainly dramatic. I don't want to put it exciting, but they were certainly dramatic. And I fear rather kind of indicative of a general issue that's sweeping across the world, which is this concern about the levels of migration and hence immigration for individual countries, because in both cases we've seen the party winning the biggest votes being, shall we say, of a populist nature. In Argentina, interesting enough, this new president, Javier Milei, is a real, or at least has presented himself as a real out and out kind of libertarian, if you like, a classic follower of Hayek and others like that. And he wants to, completely change the way that the Argentine economy, which has been a bit of a basket case for years and years and years, he's come up with all these kind of solutions which are much favored by the libertarian camp, saying, we're going to basically dollarize the currency. That was one of the things he promised to do, and he's really a kind of roll back the state, let the market decide what happens. Well, we'll see whether he gets away with that. And in Holland, in the Netherlands, we've seen, surprise, really, I think a wake-up call for the EU and for Europe as a whole. This populist figure, Geert Wilders, won the election in the sense of becoming the largest party. He may now be, he was trying to form a government, but he's been elected very much, on the same kind of platform as Marine Le Pen in France and so on, which is basically expressing public concern about the high levels of immigration into Holland and France, respectively. And of course, that's a big issue in the UK as well. It really has become a very, front of brain, if I can put it that way, political factor. And it's not going to go away because the levels of migration across the world are very are growing. Let's put it that way. So every country is facing this problem.
Okay, so we'll be watching that. Maybe this is a case of when the trend is perhaps not your friend, or at least not a friend to some sections of the global population. But I need cheering up, Jonathan, because I know that you were at the races on Friday, which sound brutally cold. But was it when you were? I think you were at Ascot, weren't you?
At Ascot, yeah. Very lucky to be. Yeah.
Were there any signs of disposable income out there, and betting on horses? Are the odds for betting on horses better than investing in equities, for example?
Well, there are some similarities in a way. There are some similarities in the sense that certainly if you invest in funds rather than equities, there's a sort of croupier's take, if you like, which is the fund manager's fee. And of course, in betting on the horses, of course, there is the bookmaker's margin you have to deal with. If you work out all the odds, there's always a small percentage in favor of the bookmaker, and they wouldn't be doing it otherwise. So, but that's, I think, where the similarity ends, because if you invest in equities, if you just invest in the stock market, over time, you will generate a positive real return after inflation. In betting on horses, that is certainly not the case. I mean, most people don't make money out of betting on horses, or very few people make money out of betting on horses. I mean, the best method, I think, for betting on horses is the one that you're not allowed to do in the stock market, which is basically inside information. That will always stand you in good stead if you've actually got some information from the stable yard that happens to be particularly significant, and provided there aren't other stable yards where the same thing is going on, you can make money that way. But I think the basic principle is don't bet often, but just bet big when you have high conviction, but don't invest on every race. I mean, that's a crazy way to gamble your money away. Don't do it.
And would that be your advice overall, generally, to investors for 2024, just in case I don't get to see you before the year's out?
No, I don't think it would be my general advice. I mean, I think, well, certainly not betting on the horses, I don't think would be a good strategy. Sorry, excuse me. I don't think betting on horses would be a good strategy, but I do think there's some reason to think that the UK stock market in particular might do quite well next year, mainly because these are reasons being well rehearsed for years and years and years. I didn't mention that in the budget, the Chancellor did talk a little bit about trying to make the UK a more attractive listing regime to get more companies to float on the London market and so on and so forth. That's not going to happen in the short term. Again, these are all long-term changes that would be helpful. But I think there's some reason to think that the UK stock market could do quite well, mainly because it's cheap. I mean, there's no other reason that, and it's a good time to buy things when they're cheap. But we don't know what's going to happen to interest rates. I mean, that's still the big issue for 2024. I don't think you can get away from that. If interest rates stay higher for longer, which is what the central banks are trying to convince you that's will be the case, then don't expect too much. But if they do start to come down, the crucial question then is, well, why are they coming down? Are they coming down because we're heading into recession and companies are failing and so on? Economic growth is slowing, then that's not going to be good for equities, be good for bonds though. But if it's because the cycle has turned, then that would be positive for equities as well. So I think it's going to be a fascinating year. They always are. It's an election year in the US. That's always important. So I wouldn't expect next year to be too bad. But I know I'm not. I said before, I'm kind of fairly gloomy about the medium longer term outlook. But I think next year, well, maybe will surprise us a little bit on the upside.
Wonderful. That's what I'm hearing as well. Jonathan, it's been a pleasure working with you this year, and I'll see you next.
Looking forward to it.